Hey everybody, happy Monday. I'm doing this market update from the ground out in the backyard. Zoe's here with me. What you doing, Zoe? And Cleo is over there, although I don't think I can get the camera around to show you her, but she's enjoying laying in the grass. So it's actually a really nice day out today. It's cloudy, although I'm squinting, I don't know why, and it's not too hot. So we're just gonna sit here and do a little market update. I did want to talk about something because I mentioned, I talk through the CMI, I talk about supply every week, and there's got to be some question as to why is our supply so low. And I don't know if I've mentioned this in a long time, but basically we are undersupplied because we kind of stopped building after 2008. So after the crash, that was one of the issues with the crash in 2008 is we had a much larger supply than we had population here in Phoenix, and so a lot of that building slowed down and essentially stopped to some degree. And now we're in the opposite problem. So now we have a population that is larger than the housing availability that we have. So we're essentially in a housing shortage. So our population is about 4.9 million right now, and our housing availability is about 1.9 million. Or housing units. So clearly that's an issue when it comes to having enough homes available for people that want to live here. And then if you remember what I mentioned, I think last week or 2 weeks ago, our population is growing 4 times faster than the population of the US is. So we continue to get more people here, and this housing shortage is not changing at all. That being said, our new development is actually up 20% based on our single family permits for future development. So that's a good thing. It's still not going to be enough, but at least we're working towards that. So let's talk about the CMI. If you haven't watched my videos in the past and you're not familiar, the CMI is the Cromford Market Index. The Cromford Report is a publication that I follow that studies the MLS data for Phoenix here, and they look at everything on a daily basis and extrapolate that into a bunch of charts and graphs and really useful data for me to use as a realtor and share with you. So the CMI, Cromford Market Index, it is basically a value or an algorithm that is assigned to measure the supply and demand in our market. So a CMI value anywhere between 90 to 110 is a balanced market, and anything over 110 is considered a seller's market. And we've been in the 500 range for a while, and we've slowly started to fall over the last month and a half. Today we're sitting at 479.4, so definitely a seller's market if you're new to this, very far into a seller's market, but it has been declining week over week, and that's largely due to our supply not increasing whatsoever, and our demand slowly decreasing. Now, although demand is increasing, it is still above normal. So, when people say demand's gone down, it's not low demand by any means. Oh gosh, I just lost my notes. Hold on. We're still 8% above normal for demand. This is what happens when you try to film outside. Hi, Cleo. Okay, so our demand is still 8% above normal, so it's not like that's low, and it has been dropping, but it's still above normal. It was dropping about 8 points per month on the demand side, and now it's only dropping 4 points per month, kind of on average, so that's slowed quite a bit. It actually might hang out where it's at and not go to the normal range or below normal if that continues, but who knows. Our supply, which is the problem child, is still very low. God. It is at 22.6, so about 78% below normal. But here's some good news. It has not continued to drop. It's actually slightly, very slightly, gradually been increasing in the last couple days or weeks, but very, very, very slightly. So not something that you're really going to notice, but I mean, it's good news if that trend continues, especially between 400,000 and 800,000. In those price ranges, we've seen just kind of a gradual increase in supply. So I'm hopeful that that can continue and we start to see more homes on the market, because that would really help us out a great deal. So although our CMI has been going down, it's not crashing. It's not going downwards at a rate that is scary. We're just back to where we were at in January. And if you remember where we were at in January, we were still in a crazy market, and my market updates at that time were talking about some of the same things, just not quite as drastic as it is now. So for just a frame of reference, we're kind of back to January levels as far as that goes. I don't know what they are doing with this little performance back here. Hopefully it's not too distracting. All right, so our new listings are up 7% from last year, which is not too surprising because this was when we were in the pandemic at the very beginning, and lockdowns, and so obviously listings were not increasing. But under our 400,000 price range, our supply is actually down 29%. From 2019. So if you compare it to 2019, because that was more of a normal year than last spring was, our supply is down 29% at any price range under 400,000. So that's where it's really tough right now. Anything under 400, very hard to find available options for buyers. Our homes that are being sold over asking price, 56% of sales are going over the asking price. I remember when that was at like 35% and I was shocked, and now we're at 56%. So it's pretty much standard for these homes to be selling over the asking price. The median number over asking is about 15,000. So just keep that in mind. If you are listing your house and you know that you're going to get offers over asking, probably about 15,000, that's the median. If you're buying, kind of budget for that when you're looking at home prices. Appreciation rates are super high. I've talked about this before. It's continuing to stay high because of everything that's going on. So, but what we see is appreciation is higher for larger homes. So homes that are like 1,500 to 2,000 square feet, appreciation rates are about 25%. For homes that are about 3,000 to 4,000 square feet, appreciation rates are about 34%. So just something to think about depending on the situation that you're in. And then investors. If you are an investor, specifically a flip investor, believe it or not, people are flipping homes in this market and making some good money. So the median gross gain for flip investors is about $78,500 on a project. If you look at luxury flips, so anything over $1 million that's held for about 365 days or a year, before it's resold, that gross gain is the median gross gain is $425,000. So if you're looking to get into flips, obviously you can make some good money there. You just got to make good choices on what you're flipping and where it's at. But I thought that was an interesting nugget if you are an investor to know those numbers, or if you're thinking about getting into it, that's kind of what you can expect. And flips are still happening in this market. So anyway, I'm going to wrap this up now. These two have, I think, been hopefully entertaining enough, along with all of my market stats. And I will be back next week with another update. If you have any questions, check in my description below. I've got my contact information, as well as a link where you can schedule a call with me if you want to chat about your situation. Otherwise, you know where to find me. So have a great week. Thanks for watching, and I will talk to you all soon.